to the first session with Nanaska regarding managerial level case study, gateway exam for February 2019. So today, even though it says review number 1, I'm going to concentrate only on month. I'm going to only concentrate on the structure of the organization. That's the only thing we'll be looking at now. So now, name of our company is Crowncare. We are a dental practice. We have 30 dental practices in a country close to one main city, close to the capital city. Now, your position of the organization goes as finance manager. Obviously, then you report to the senior finance manager, and the senior finance manager reports to the finance director of the organization, and the finance director of the organization is a dentist in this particular case. So you report to senior finance manager, who is professionally qualified in finance, who has experience in finance. That is true. But your boss, the senior finance manager, reports to the finance director, who is a dentist, who spent 80% of his time, Morrison, he spent 80% of his time with the patients. He will be doing clinical work for 80% of his time. So on the exam day, if you are sending him an email, maybe something to think about. Maybe something to think about. Will you say IRR is this, accounting ARR is this, or will you try to explain those words a little bit if you are sending an email to the finance director? Of course, your senior finance manager might ask you to draft an email to the finance director, something to be considered about. Well, not only the finance director is a dentist, all the shareholders of the company are dentists. All the directors of the company are dentists as well. So that is something interesting in this organization, and we will try to work on that as we go on. So now these are the keywords and all that I will not spend much time, since my main concentration today is on the structure of the organization. So I'll go into that area. Company ID, Crowncare Group, operates dental practices. We are 72 years old as an organization. We are not a new company. We started our businesses in 1947 with two gentlemen, two dentists, having one practice in 1947, which is 72 years ago as far as 2019 is concerned. Now, which means what? Which means we must be having fairly a stronger culture. Over a period of 72 years, you become stronger in the culture. Change management might not be the easiest in an organization like ours. Be careful on that, because your examiner is very much interested in an area called change management, which is the last part of E2 syllabus. So be careful on that. That's important. Now, since we said we started in 1947, 72 years, look at how fast we have grown over the years. Let's look at how fast we have grown over the years. Well, did we grow quite faster, or was it a slow growth? We should try to see that as well. So therefore, I'm jumping the slide to look at that. I mean, even though Preseen says that we have grown rapidly, I doubt that. We started in 1947. It took 8 years. Only in 1955, we opened our second practice. Only 1980 is basically 25 years after we opened in the second practice. We started in 1947. The second practice was started in 1955. From 1955, only after 20 years, which is in 1980, we had 7 practices. So for the 25 years, we had opened 5 practices. Today, in 2018, we do have 30. In 2018, we do have 30. Now, my argument is, I don't think we have grown rapidly. We have grown through acquisition, that I am aware. Preseen told us. But I don't think we have grown rapidly. But after 72 years, it may be interesting for us to kind of look at the overall organization again and to decide what the next step is. We started in 1947 and we make ourselves a proper organization, proper company in 1980. What could happen in 2018? Well, another structural change. As I said, I'm going to look at only the structure. We might decide to go for an IPO. Well, we have 40 shareholders. We might decide to go for an IPO. We might say, look here, we have 30 dental practices, not enough. We want to make it 45. We want to make it 45 dental practices. Well, then we need capital to grow. We have 40 shareholders. All of them are dentists, as I said before, and they might not have enough money to put in. And they might say, look here, we want to take a back seat now. We want to get the professional management to run it, and we want more capital to come in. The easiest way is to go for an IPO. So this is a change in the structure. You need to be ready. So a lot of F2 questions might come in related to that, and I want you to think about it. Again, coming back to the structure. How many dental practices we have? We have 30 dental practices. All 30 dental practices have been registered as separate subsidiary companies. 100% owned subsidiary companies. Now, what does that mean? That means you need to do a consolidation. You need to prepare consolidated financial statements for 30 subsidiaries, but the beauty is there is no minority interest. All 30 subsidiaries are owned 100% by you. So there is some administration work that you need to do. Don't forget, in F2, consolidation is another very interesting area for the examiner. It's very interesting area for the examiner. But my interest, coming back to the structure, I don't know whether it's worthwhile to have 30 different subsidiaries. I do agree we need to have 30 different practices. But why do we need to have subsidiaries? Can't we run them as one main company and the business unit of 30 business units of that company? So don't forget, 30 subsidiaries means what? 30 different external audits. 30 subsidiaries means what? Reporting has to be done 30 times. Legal things has to be done 30 times. When a director resigns, when a director resigns, do we have directors for the individual companies? No, we have directors for the group. So things need to be done 30 times. We might look at a structural change. We might say, okay, very good. Let's have one legal entity. Let's have one legal entity, and 30 dental practices can be the business units of that. Another structural change, right? So in our mock number 1, 2, and 5, we only concentrate on the structural changes. Of course, our main concentration, I think, is on the structural changes. We include a little bit of E2, P2, F2 coming in, and a little bit of other areas coming in. But the main concentration is on the structural changes. That is why I'm trying to cover it now. Okay. What could be the other change that might happen on the exam day? We have 30 different practices. What could happen to that 30 on the exam day? The 30, we might decide to make it 40 on the exam day, or the 30, we might decide to make it 25 on the exam day. Making it 30, making 30 40, we are 30 now, try to increase it up to 40, will mean we need additional capital, raising finance, the impact to cost of capital coming from the F2 areas. Please be ready. Go through the notes related to this case study given by us related to those areas. The other matter is reducing. That's why interest today from 30 to 25. Why do you need to reduce from 30 to 25? Why you are trying to shrink your organization? The answer may be in practice-wise profitability that we worked out, business unit-wise profitability that we worked out. Maybe we have calculated profit not for the entire organization. We are a very profitable organization, I do agree. But then we have gone one step down and calculated profit for the 30 dental practices individually. Then we realize there are few practices, as an example 5, that are not making money or that are not making enough money compared to the rest. So that's a situation where you try to decide to close down 5. So that is another structural change that might come in. Increase in the number of practices or decrease in the number of practices. That is another change that might come in. P2 activity-based costing, calculating profit for individual dental practice can be an interesting topic in that situation as well. Can be an interesting topic in that situation as well. Now, let me now try to look at the structure of the company a little bit again. Let me now try to look at the structure of the company a little bit again. We'll directly go into the organizational structure and try to see things from the organizational structure. So I'm sorry, I'll jump into a different slide on that. Try to see other structural changes that may be possible. We have Alison Lee, who is a dentist, our CEO. Then we have HR director, finance director, clinical director, marketing director. Below the clinical director, who is Simon, below him, we have heads of practices. So we basically have 30 heads of practices that are reporting to the head of practice, that are reporting to the clinical director. So Simon, I'm sure, is quite a busy person. Of course, he's working full time on his job, being the clinical director, as much as the CEO. Both of them are 100% working on the specific management roles given to them. But the finance director is doing only 80% on the clinical work, 20% on the finance work. Similarly, HR director, 80% on seeing patients, 20% on the HR. But the Simon, clinical director, and the CEO, Alison Lee, work 100% on the specific jobs given to them. That makes sense. But the point is, there are 30 heads of practices report to Simon, who is our clinical director. Tell me a structural change that you may recommend. I don't know whether it's practical for anyone to get these 30 heads of practices to report to one person. Maybe we want to do a clusterization. Maybe we want to divide these 30 business practices into five clusters. Each cluster will have 6 dental practices, and each cluster will have one boss, and those 5 bosses can come and report to Simon, who is our clinical director. Another structural change that I want you to concentrate on. And don't forget, this structure is very interesting organizational structure, because you have a practice manager. Each practice has a manager. He's a non-clinical staff. What do you mean by non-clinical staff? He doesn't get involved with the patients. He's not a technical guy in the dental industry. He's the one who looks after accounting. He's the one who looks after the reception. He's the one who looked after the administration. You got to have someone like that. Now then, to whom he will report to? Of course, being the practice manager, he got to report to the heads of practice. Wherever the practice that he's working as a practice manager, he needs to report to the head of practice of that particular unit. And I'm sure he needs to report to the finance function. I'm sure he needs to report to the HR function. So when I say finance and HR function, I am referring to finance and HR function at the group level. So practice managers will have one functional reporting, either to the HR director or to the senior HR manager. Another functional reporting to the finance director or senior finance manager, or to you, the finance manager. So I'm sure you being the finance manager, you work with practice managers of 30 different practices. So looking at this practice manager, they will have dual reporting. So that is something that you can look at as an interesting situation here. Now, another, not a structural change, but a big change that they might talk on the exam day related to the structure is, do we have the right level of directors? Do we have the right number of directors? That can be an interesting argument as well. Now, our HR director is a dentist. Is it the right thing to do? Shouldn't we take professionally qualified HR director? A question for you to think about it, something that we'll address from the mock number 2 itself. We have a marketing director who is a dentist who spend 80% time with clinical work. Similarly, same goes to the finance, marketing, HR. Should we recruit professionally qualified people there? What's the right answer? No one is worried about right answers in the case studies. We are worried about the arguments for and arguments against. So please ensure you are able to build arguments for, such as making the function more professional, such as getting the best practices in HR, marketing, finance into our business, such as having some recognition for the outside world of having a professionally qualified HR, finance, marketing directors. A lot of disadvantages. I don't think they have a full-time job. As of now, they don't have a full-time job. As of now, they don't have a full-time job. And these directors are shareholders as well. It might not be a very easy change if you're trying to do it. I don't think Morrison will like it. I don't think Allison, marketing director, will like it. So change management again can be important from E2 last chapter. Change management comes on E3 as well. Change management is 25% in the E2 syllabus, but as far as case study is concerned, it's much higher percentage. So you got to be careful on that. There'll be 5 questions given on change management for you to practice. Please ensure you do. Other thing is, below HR director, finance director, marketing director, presently we have a professionally qualified senior manager. So maybe we can run with them. Maybe we can run with them. So that is something that I wanted you to concentrate on. Okay, what are the changes to the structure? Who are the directors you would like to recruit? We don't have an IT director. Should we have one? I don't know, for argument's sake. We don't have a legal director. We don't have a legal director. Should we have a legal director? Argument's sake. So those are the 2 arguments that I would like to leave with you. Whether we should recruit a IT director, whether we need it, argument for you to have an argument, whether we need one or not. And the other one that I would like to ask you whether we need is whether we need to recruit a IT and a legal director. Now, as far as the IT director is concerned, I am sure IT director might be important for us. I have a feeling IT director is more important for us simply because of a lot of details have been given in the Preseen about the IT director. A lot of details have been given in the Preseen about the IT director. So if you can go to the Preseen, I can't open the Preseen here now, unfortunately. But if you do go to the Preseen, and you will see there are details given about the IT director. I can't open the Preseen, so therefore I'll not go into that. But go to page number 14. Go to page number 14. In the page number 14, they've been talking about the IT function as an important function. So I want you to look at that as well. Okay. Now, page number 14, you can look at separately. The other thing, since we mentioned about some accounting standards, since we mentioned about accounting standards on the consolidation, please be aware there are changes to the accounting standards from the 2019. This is not a session where I will try to go through the accounting standard in detail. This is not the objective now. However, please be aware, IAS 70 leases now had been replaced by IFRS 16, which is examinable from now. There's a big change. So if you are if you are the company who is trying to take the assets in, accounting standard, the new accounting standard IFRS 16 has changed the rules of recording. The old finance lease, operating lease concepts have been taken out as far as the lessee is concerned. Then your famous accounting standard on IAS 18, which is the revenue recognition, again replaced by IFRS 15. So those 2 are big changes. So I would appreciate if you can go through them and look at them as well. Okay. One more point to be highlighted, given the situation, I want to highlight one more point. Let's look at just one question from the last session past papers, which is November 2018 past papers. We will look at just one question for you to get a feel about what kind of questions might be there on the exam day. Because a lot of people try to master the theory on E2, P2, F2 and assume you will pass by mastering E2, P2, F2 theory, which is not the case. Now look at this question. So what is this question that I have opened for you now? This is November 2018 last session. As usual, there are 5 variants. I'm looking at variant number 1. Now, you don't need to know the industry about this. Of course, there are separate audios available if you want to go through the past papers. But quickly tell you, we were a soft drink manufacturer. In the Preseen, we have been given details about a competitor called Tiger Fish. In the Preseen, we had been given details about a company called Tiger Fish. In 2018 November, variant number 1, we were thinking about acquiring Tiger Fish. That's the discussion that was given there. Now look at this question. So I will now try to concentrate on this question, so you will be able to kind of get a rough idea. These are the questions that I want to concentrate on. Look at this question. Firstly, I have put together the project appraisal attached. It's given in the reference material. I'm happy with the spreadsheet formula work so that you can assume arithmetic accuracy is okay. On the case study, they will not ask you to do the numbers, calculate the numbers. So what they will ask you to do is they will calculate the numbers. They will warn you not to recheck the numbers because the calculation knowledge will not be tested. But they will see whether you can interpret the numbers, whether you can explain, evaluate based on the numbers given. That is what they will test on the exam day. So can I continue to read the question, please? I think that we should proceed with the acquisition. We are trying to go and acquire this competitor Tiger Fish, whose details were given in the Preseen. I think that we should proceed with the acquisition. But I want you to evaluate this conclusion and the assumptions I have made before I present to the board. So you have been asked to evaluate 2 different things. Evaluate number 1, the conclusion made. Evaluate number 2, the assumptions that were based in the calculations. So for you to comment, they have given the conclusion. I'm sure conclusion you can see that is given at the bottom of the page. The investment has a positive net present value and therefore Grapal is us. Grapal is the Preseen company for November 2018, soft drink company. The investment has a positive net present value and therefore Grapal should acquire Tiger Fish. That's the conclusion given. What you got to do? Evaluate that conclusion. So you got to evaluate 2 things, right? One is conclusion. Other one is you got to evaluate the assumptions made. So where are the assumptions made? Here we go. The report has been produced using the following assumptions. The second top line. Assumptions are given. And look at the numbers with it. They are also, I'm sure, based on certain assumptions. So you got to evaluate the assumptions and you got to evaluate the decision that is taken. Now, look at these numbers. We will now concentrate, because past paper reviews will be done separately. Here, not a past paper review. Here, just to show you what kind of questions would come. I want to ensure that you don't concentrate only on E2, P2, F2. That's a way to fail. You got to put a lot of business sense into E2, P2, F2. Look at this question. Actually, that is what we call independent thinking. That is what we try to practice through mock 1, 2, 3, 4. We try to practice the independent thinking. That's a critical area for you to pass. Now look at the numbers. Acquisition cost 3 million. Restructuring cost 2.8 million at the end of the first year. Contribution first year 1.2 million. Then year number 2, 3, 4, 5. Every year 2.3 million. Additional fixed cost 0.5 million. And then 0.5 million every year. Therefore, net cash flows have been worked out. Then the discounting factor at 10% discounting rate. So discounted cash flows are -3 for the initial year 0. Now, at the end of the year 1.9 another minus, then 5.2 is the cumulative cash flows discounted for year number 2, 3, 4, 5. Therefore, net present value is 0.3 million. Conclusion made by the examiner here was based on the positive NPV, they have decided to go ahead with acquiring this company. So what you are supposed to do here is you got to evaluate that decision. So how will you evaluate that decision? Now, when you try to evaluate something, there are two things that you can do. One is you got to say, yes, it's a good decision. And then you got to say, no, it's not a good decision. So those are the two different areas that is available for you to comment. So now give me an argument to say, no, this is not a good decision because this is not a good decision. Even though net present value is positive, I really don't think we should go ahead with it. This is what was given in the examiner's answer for November 2018, MCS variant number 1. So even though NPV is positive, why do you think we should not go ahead with it? Look at the NPV, 0.3 million for investment of how much? 3 million now, 2.8 million for restructuring. I mean, restructuring cost of 2.8 million seems to be huge. I mean, you spend 3 million to buy something, and you spend another almost 3 million to restructure. I'm sure they're looking at a huge restructure. Looks very big. Assuming numbers are right, you can go and evaluate the assumptions later anyway. You spend 5.8 million to make 0.3 million in PV. Calculations, numbers have been assumed for next 5 years. You might go wrong somewhere in the numbers by 300,000, you are gone. I mean, how much is the fixed cost for the year number 2, 3, 4, 5? Each year 0.5. In 1 year, you want to spend not 0.5, but 1 million. Your positive NPV is gone. So that is a point that you should have mentioned. That's what managerial level case study is all about. Now, what was required was an evaluation. So it doesn't mean that you should say that not to go ahead with it, but you should have given this argument. After highlighting this argument to say NPV is very, very minor, it might be even negative at the end of the 5th year. After highlighting this argument, if you ask them to go ahead or don't go ahead, that is fine. But you should have highlighted that argument is my key point. You should have highlighted that argument is my key point here. So now I was kind of able to get the Preseen to the screen. I'm sorry. I have not had it before. So I want to show you what I wanted to show you before, which was a page number 14. I want to show you page number 14, where we were having a discussion with the IT director is important. Look at this. Look at this. I'm sure this makes enough argument to say why we might need an IT director. Crowncare makes extensive use of IT in the management of all aspects of its operations. The company operates in a paperless environment. So that is my argument to say why IT can be critical, and it goes on continuously giving me long stories about our IT practices. So you might wish to look at whether you need an IT director or not. Not only that, not only page number 14, but look at page number 18 in the Preseen. In the heading of costing, Crowncare's IT system relies on a package that is designed to manage dental appointments and billing. So all what I'm trying to say is IT is critical. So therefore, the earlier argument, maybe we need to look at having an IT director is the argument that I wanted to put forward. Right? There is the argument that I wanted to put forward. We will, since we are here in the numbers, since we are here in the Preseen, I would like to give you a little bit of a challenge. we were told there are 40 shareholders of the company. In the Preseen, we were clearly told that, right? And further, we were told all the shareholders has to be dentist, and all the shareholders has to get involved with the dental work of the practices. So they should be active dentists who are working for the company. Then only you will be shareholder. If you are resigning or retiring from the active work, then you cease to be a shareholder. Your shares will be sold by you and someone else will buy, and that new person will become a shareholder and he will run as a shareholder from that. Of course, then he will get involved with the dental practices of the organization as well. So which means our shareholders will change. When one retires from the work, he will cease to be a shareholder as well. Because our rule is all the shareholders should be active dentists of the organization. So my only worry is how do we share profits in that case? So I would like to leave this issue with you for you to think about it. I would like to leave this matter with you for you to think about it. Now, so I will tell my concern, then you can think about it. Look at the profit for the year. Crowncare annual report, profit for the year is 33,196 million. All the figures are in $1,000. So I'll just say the number given there. Profit for the year is 33,196. That's the profit that we have made. Okay. Now out of this 33,196, we'll now go to the balance sheet. Now we'll move on to the balance sheet of our organization, Crowncare. I should not get confused because competitor details are given there. Don't forget, on the exam day, there will be acquisition of a competitor trying to acquire you, working together. All those are possible. They are very popular exam questions. So coming back to the balance sheet of our Crowncare, what was the retained earning? Opening retained earning was 12,721. I hope you can see the figure of 12,721. This is the figure that I'm talking about. Retained earning, opening retained earning, 12,721. Closing retained earning was 25,178. The difference between those two is only 12,457. So even though we make a profit of 33,196, what was added to retained earning is only 12,457, which means there was a dividend declared of approximately 20,000. So basically, out of the 33,196 profits made, there is a profit that is not distributed of 12,700. There is a profit that is not distributed of 12,447. So how do we treat when a shareholder resign is my question. So will all the shareholder resign only at the end of the year? The things will make easier with that, right? Why? Because then that year's profit belongs to that shareholder, his part. But here, has anyone resigned as at the end of the year? Because now you are taking part of the profit to the next year. So next year, how we are going to account for? There is a profit coming from the last year. So that is the point that I want you to think about. I'm not here to give the answer for that, but I want you to think about. And what happens? Think about the other part of it. What happens if director resigns during the year? What happens if director resigns during the year? So that is something else that I would like you to concentrate as well. Now I want to show you something else based on the past papers. Look at this question. Again, I'm taking only the last session, so it will be easier for you. Here we are talking about something else. Here we are talking about forming a new company called Company X. So what is this past paper? This is November 2018, variant number 2. Again, I am only looking at section number 1. Here we are forming a new company called tip tops. Don't go and read the Preseen. I'll just give a brief on that. Our company is Grapile. We are a soft drink manufacturer, and we need to get we are buying a special cup for our soft drink, and we are trying to form a new company that will manufacture those cups. And that company, we will have 50%, and the other shareholder will have 50% of the company as well. So that is how we are trying to run this organization. Can you see the part where we are talking about 50%? It's a joint entity, 50% owned by Grapile and 50% by the other company called Tip Tops. The question was what? The question was on the accounting treatment. That's why I said subsidiaries, associate companies, joint ventures, joint arrangements are critical questions to be seen on the exam day, and you got to be prepared to manage them. You got to be prepared to manage them because they are important on the exam day, right? So that is why, related to this topic, IFRS 3, which is a business combination, is important and critical. IFRS 10, consolidated financial statement. Then here, in this specific situation, in the variant number 2 that I mentioned, IFRS 11 of joint arrangement, and then again the old IAS 28 on the associate and joint ventures. So you got to be familiar with those standards as well, because they'll be critical for you to manage on the exam day. So that is why we always say you got to be familiar with the E2, P2, F2 parts of it. You got to be familiar with the E2, F2 parts of it. Now, just try to show you one question from the mock 1 of ours, just to give you a rough idea about what kind of questions might be seen on the exam day. What kind of question you might be seen on the exam day. Look at the section 1 given here. The section 1, these are questions from the E2 areas. These are questions from the E2 areas. Last week, I participated. Your boss is saying, actually your CEO is saying, last week I participated for a workshop organized by SEMA. At the workshop, there was a discussion about rational planning model, a theory that is coming from the E2 areas. But the question is different. The question is, I would like to see a detailed review on why and how rational planning model can be useful for us. Why and how rational planning model can be useful for us. Herewith I have attached a copy of the leaflet on the rational planning model. What does that mean? That means we are not here to check your knowledge on the rational planning model. Whether you know the rational planning model or you don't is not our concern. We are given the rational planning model for you on the exam day. Question is business sense. Question is, how will you take that theory and apply to the specific situation given? How and why rational planning model can be important is the question. How and why rational planning model can be important is the question. So that is what I wanted to show you here. So therefore, you got to find a way to look at E2, P2, F2 areas, and you got to find a way to ensure you have a control chart on the different theory areas. You got to have a control chart on the different theory areas. So these are E2 theory areas that is coming in. So likewise, E2, P2, F2, all the theory areas you got to do. So I'll just go into one area and try to show you. So look at, now this is the theory areas that are testable. And then you got to figure out whether you know how to apply that theory area to the specific situation that you are in. Now, if you look at this control chart, can I show you a question from the first page first? So then we are going in a kind of a proper order. Look at this question. Stages in rational approach to strategy development. This is the E2 first part. Stages in rational approach to strategy development. That is the question that you have seen from our mock paper. Look at one more. Look at this last part. Discuss management and leadership issues associated with project including the roles of key players in the project. Let me concentrate on the first part. Discuss management and leadership issues associated with the project. Discuss management and leadership issues associated with the projects. So that's a theory area that is available. You got to now see whether you know how to apply it to the case study on the exam day to the given specific situation. That you got to be aware of. That you got to be aware of, because that is what examiner will test you. That is what examiner will test you. I'm trying to show you the same past paper again. November 2018, variant number 1. I'm trying to show you two again. Variant number 1, but this is the last section. This is the last section of the variant number 1 that I'm trying to have a quick discussion with you now. Right? Look at the last paragraph. I would be grateful for some help here. So please give me a little bit of guidance on how I could use them to help with the planning project. Thirdly, that's the part that I'm interested in. Thirdly, please guide me on any leadership issues I'm likely to encounter whilst managing this project. So isn't this paper easy? It is. There's a E2, P2, F2 areas available, and you got to apply that knowledge to the situation, but then you got to have a control chart that I showed you to ensure not that you go through the theory part very well. That's not important. Going through the theory part is not the game. The game is what? The game is to ensure that you actually can apply those theories to the specific situation given. Look at that situation. In the E2 syllabus, there is a part called leadership issues in project management. And here you have been given a very clear question. You have been given a very clear question of the leadership issues for a specific project. So this is what I wanted you to be aware of. This is what I wanted you to be aware of. So these are the areas that I want you to ensure that you are thorough with. So another question from another past paper. This is actually from November 2016. Improve. This is actually from November. Variant number 5 is the one that I should be referring to. So look at some of the questions that is coming here. Discuss key project management issues coming from E2. Advise the aspects of project appraisal. We saw that question in the November 2018. This is November 2016. So these past paper control charts and the theory control charts are therefore absolutely critical for you. So now let's summarize the possible structural issues. There might be a big change to the structure because we are a private company now if you go for an IPO. One that we already discussed, you got to be ready to manage that clearly. Second, we might try to outsource certain things. From the organization structure, we might decide to outsource certain things. What kind of things we might outsource? What kind of things we might outsource on the exam day? Well, you might outsource the entire accounting function. You might outsource the IT function. You might outsource the payroll function of it. So some of them will mean the jobs of the practice managers will reduce, but a structural change, which we are discussing very soon in the marks. Or we might decide to insource certain things. What is outsourced now, we might try to take it in. I would like to give an example of such an insourcing that we might try to do that, which might come from the page number 18 of the Preseen. So let me see whether I can show it to you quickly. Something that we might consider insourcing. Something that we are using outsourced services now. Page number 17, I'm sure. I'm sorry. Dental laboratories. Crowncare, the page number 17, Crowncare relies on independent dental laboratories for its needs. So that is something you might decide to insource, which means you might decide to open our own laboratories for us to use for our purposes. So that is something, again, we might look at. The other structural change we might look at is about this insurance, because most of Crowncare patients are insured by National Dental, a third-party insurance company. A lot of things could happen with them. E2 areas, managing relationship with stakeholders. National Dental is an important stakeholder for us. We might decide to have a joint venture with them. We might decide to have MOU with them. We might even, in our mock paper, there's a question, decide to buy some shares of that company, National Dental. So another structural change, your structure will change entirely if you try to do that. Having your own insurance is the other one that you may look at. Okay, so what are the structural changes that we are looking at? Going for an IPO, number one. Insourcing or outsourcing certain things. Insourcing laboratories, outsourcing IT. Why not we go into insurance or buy National Dental, something with that. Creating clusters. We have 30 dental practices now. We might decide to create clusters, right? 5 different clusters that we discussed. We have 30 different subsidiaries. We might decide that we don't need subsidiaries to run separately. And we might look at the structure of the organization and we will try to do certain changes. Things like what? Whether we need an IT director, structural change. Have a chairman for the organization, structural change. Bring in non-executive directors, structural change. Those other structural changes that are likely. Another structural change. I said not a structure, but something to do with the structure. Professionally qualified finance director. Do we need or not? I'm not saying we need. I'm saying be ready for the arguments, because that is something that might come up as an idea. The last structural change that I want you to concentrate on is, should we run as a centralized organization or should we run as a decentralized organization? We have a marketing function. Should we run the marketing function as a centralized organization? Should we run the marketing function as a decentralized organization? That is an argument that can be interesting for you to begin. So that can be important not only for marketing, that can be important even for finance as well, right? Marketing. Will the individual dental practices be allowed to do their own marketing, or will marketing be entirely centralized? Similarly for finance. How strong your IT system also will matter there, right? So those are the 10 different structural changes that may be possible. I did not look at anything from the Preseen. I look at only the structural changes and related them to the past papers, related them to the accounting standards as much as possible, because I wanted to take 45 minutes to 50 minutes for the first discussion. Then I'll allow you to ask questions. So last point that I want to highlight is look at the KYI. Earlier, what we look at was the KYP, know your Preseen. Know your Preseen is the PowerPoint presentation you looked at before. KYP, know your Preseen. This is the KYI for you to know the industry. So that is where we will certainly talk about the history of the dental industry, right? Father of modern dental industry, the history again, and then the dental implants that is happening, and the cosmetic dental industry part of it, latest trend, very important, that will change the entire way that we look at it. Different dental companies that are available in the real world, the Australian dental practices, how it works, and then we will try to go into different instruments, the latest technology that is being used. So all those will coming as the KYI as well. So you can ask for a copy of some free material of the KYP, KYI from Nanaska, info@nanaska.com. Info@nanaska.com, you can ask. So now I will invite all of you all to ask questions and I'll answer them. So I had taken 50 minutes exactly on this, and we will allocate, we're taking 50 minutes for this. We'll allocate another 40 minutes for question and answer. So you can keep on asking questions, type the questions, I will answer. But the video recording, I'll stop here. But we'll have one more discussion like this, where we will allow you to ask questions and we will answer. So if anyone is interested in, please write to info@nanaska.com so we can add you to our next discussion, where I will do about 50-minute review and 40 minutes. Total is 1.5 hours. 40 minutes I will allow for you to ask questions. So here I'll stop the video, but please join for our next discussion by writing to info@nanaska.com. All the very best for your exams, and thank you very much for joining with this.